hour before the opening bell sounds on Wall Street, and markets are higher. Futures indicating a gain of about 90 points on the Dow Industrials and 98 points higher on the NASDAQ ahead of Friday's late release of the September CPI. That's coming up this Friday, and, of course, ahead of another big week of third-quarter earnings. The sentiment on Wall Street turning around completely on Friday after President Trump told me that a 157% tariff on China was not sustainable. This morning, the Journal is reporting that the president may exempt dozens of products from his reciprocal tariffs ahead of the Supreme Court decision on tariffs and the use of an emergency for tariffs. That's happening on November 5th. Here's the president in my exclusive yesterday. He squeezed the U.S. by tightening the export controls on rare earth minerals.
He did, and I raised our tariffs to 100% on top of what they're already paying, which is far worse. Far worse. We'll see what happens with China. I've always had a great relationship with him, as you know. But they're always looking for an edge.
If you put that 100% tariff on top of what's in place already, you're talking about 157% tariff on China. Can that stand?
No.
I mean, what is that going to do to the economy?
It's not sustainable, but that's what the number is. It's probably not, it could stand. But they forced me to do that. I think we're going to do fine with China. I get along great with him. He's a very strong leader, a very, amazing man. I think we're going to be fine with China, but we have to have a fair deal. It's got to be fair. And you cover it as well as anybody that's ever covered this subject.
And joining me right now is the founder of the Bear Traps Report, Larry McDonald. Larry, great to see you. Thank you so much for being here. So you've got the uncertainty over China. By the way, Treasury Secretary Scott Bessent likely going to Malaysia this week to meet with his trade delegation from China. As well, the president going to meet with Xi Jinping at the APEC summit on October 31st. Got a government shutdown. And then you've got all these worries about the regional banking sector. Your thoughts on stocks today?
Well, above all, Maria, as you know, we run an institutional platform with hedge funds, mutual fund and pension funds in about 20 plus countries. The one thing people are talking about is liquidity. So the best measure of liquidity is crypto real time. It's one of them. Those stocks, these crypto coins, the tertiary coins are down like 30, 40%. And so if you look at that, if you measure that up against the repo market, the effective Fed funds rate traded through the bound. And all that means twice in the last 2 weeks, all that means for people watching us right now is that liquidity is receding. And then last week, the emergency repo facility at the New York Fed was really pounded on by these regional banks. Let me just read some stats to you. The business development companies are down 30 to 40%.
Wow.
Bernardo, which is a big commercial real estate player, they're down 10%. Buy now, pay later names down 30 to 40%. Regional banks, and this is all in the last 2-3 weeks, down 20 to 30%. And then the last one is the crypto. Like I said, the tertiary crypto names off 30 to 40. That means liquidity is receding. That's the most important thing for our viewers.
Well, I mean, you're talking about liquidity, but that is perhaps colliding with this recent convergence of isolated fraud issues. Increased concern about, is this cockroaches, or are there more issues here in various portfolios because of these credit fears? Do you believe that these credit fears are true, or is this overblown?
Well, when I talk to really sophisticated CIOs that run investment grade funds, they say that Tricolor and First Brands, there's not as much interconnectedness to the broader market because it's just loans, right? So that's a good pushback. But then, I talked to Harry Markopolos, the famous, he basically broke the Enron. I was in Puerto Rico, did a speech over the last week. And when you talk to people like Harry, you talk to other people, the one thing is there's so much fraud in a shorter period of time. We've got a massive fraud in Tricolor, a massive fraud in First Brands, and now we have different pieces of fraud in commercial real estate, right? So that's affecting. So it's basically like, at the end of the day, if you remember one thing from our book, How to Listen When Markets Speak, when you don't allow the business cycle to function over longer and longer and longer periods of time, what you're doing is you're actually creating Bernie Madoffs and you're placing them on street corners around the United States. There's no cleansing process.
Wow. Well, look, regulation easing has been a main point of this president's portfolio and his agenda. Bank regulators will be testifying this week, Wednesday, before the Senate Banking Committee. So we'll get updates on capital rules and bank M&A and things like that. But I guess if you are expecting that the message of the market, as you say, and what to do when listening to markets, if that continues here, are there areas to hide in what could be volatility in this market? How do you want to allocate capital? How are your sources, that institutional network that you have, allocating capital right now?
Well, one thing we've seen in recent weeks, what was really strange, is the staples. So that's your Colgate, Palmolives, your Mercks, your recession-proof stocks are outperforming discretionary in recent weeks by like 5-6%. That's very strange, right? That means money is moving into more defensive things. And so, I would say obviously cash is great, but then you've got certain parts of the market that are really cheap, like the energy names, right? So you've got, they're pricing in. There's certain parts of the market that are actually priced in a recession already. So, if you look at the XOP or the XLE or Exxon and Chevron, Schlumberger, these things have really dramatically underperformed. And then when you go into the new year, you get through that tax loss selling, and then you get these spectacular returns over the next couple of years, most likely.
All right, we will leave it there. Larry, always a pleasure. Love to connect. Thank you, sir.
Thanks, Maria. I appreciate it.
Larry McDonald joining us, the Bear Traps Report. And there is the book, How to Listen to Markets, and listening to markets when they speak.